Hello students, today we will be solving last question of this ledger chapter. Now in this question, all the topics that we have discussed till now in small sessions are combined together. Like in this question we have to prepare special purpose subsidiary books, then we have to prepare this ledger accounts, and at last we have to prepare trial balance. Now let us see what the question is asking us. Now enter the following transactions in proper subsidiary books. Means there will be different subsidiary books like cash book, purchase book, sales book, purchase return book, journal proper, etc. Then we have to post them into ledger accounts, and we have to balance those accounts as well, and at last we have to prepare trial balance. So it is a very lengthy procedure. Okay, that is why I used to ask you, or I instruct you to read the question carefully before starting your answer. Now let us read the question. The following balances existed in the books of Gopalji brothers on 1st April 2017. Now these are the balances that appear. That means these are nothing but our opening balances that we have at the starting of month. So that means we have to pass opening entry. Okay, so first what we will do is that we will prepare journal proper, because in journal proper we used to pass opening entry. Okay, so see the question. We have assets. All the assets will come in debit side and all the liabilities will come in the credit side. So what we will do is that we will write cash in hand will be written as cash account debit 40,000, then bank account debit MARAM-COMMERCE 34. So from we wrote all the assets as well as to Mohan Silk. We have only one liabilities given in the question, that is Mohan Silk Limited. He is our creditor. So we wrote 15,000 in credit side. Now what we have to do is that since we know that in journal debit and credit side both should be equal, so we will find out total of all these figures. Then we will deduct Mohan Silk Limited's 15,000, and the remaining amount will be nothing but our balancing figure, and we will write it as to capital account, that is 4,82,000. Now since we are supposed to prepare ledger accounts as well, so what we will do is that we will open each account, ledger account of all this amount. Okay, now cash account and bank account, you ignore these two, because while preparing cash book also we will write that one. Let me show you. Okay, now here this is our cash book. Okay, now since we in the question we have cash in hand balance, cash at bank balance, means both of them are debit balance. So we will write in the debit side of our cash book as to balance brought down 40,000 in cash column and 60,000 in bank column. Now if in any question if they give like bank overdraft is there, then at that time what we will do is that we will write on the credit side of our cash book as by balance brought down. In the bank column we would have written the amount. Okay, but since in this question both the balance of cash as well as bank is debit balance, so we wrote those two in the debit column of our cash book. So as I told you that after passing journal entry for the opening entry, except for cash and bank account, we will open MARAM-COMMERCE account in ledger, Brij Kishore Charan Das stock account, furniture account, as well as Mohan Silk Limited account. Okay, now these are the ledger accounts. Now see MARAM-COMMERCE, since when you see in the journal proper, Amar is our debtor, okay, and his balance is debit balance of rupees 34,000. So in the ledger accounts what we will do is that we will write on the credit in the debit side. Since we have debit balance, that means it will appear in the debit side as to balance brought down rupees 34,000. Okay, and this balance was appearing on April 1st, so we will write April 1 to balance brought down 34,000. It shows that we are bringing forward the balancing figure of previous year or previous financial period. Okay, then now when you look into the journal proper, after MARAM-COMMERCE we have Brij Kishore having debit balance of 26,000. So in ledger account next we will prepare Brij Kishore, and since his account is showing debit balance, we will write to balance brought down 26,000 on April 1st. Then next we have Charan Das having debit balance of 42,000. So we will have Charan Das. Remember, you have to leave some space, okay, because till now we are making only one entry, so it's better you keep a little bit space after each ledger account, okay. Then we have Charan Das showing debit balance, that will write as to balance brought down as 42,000 as on April 1st, okay. Then next we have stock account having balance, debit balance of 2,05,000, okay. Then next we have furniture account as well, so next we will prepare furniture account showing debit balance of 90,000. Then at last we have Mohan Silk Limited showing credit balance of 15,000, so we will prepare Mohan Silk Limited. Since Mohan Silk Limited is showing credit balance, at this time we will write in the credit side by balance brought down of 15,000, okay. Then next in the journal we have capital account, that was our balancing figure, and it is also showing credit balance of 4,82,000. So in ledger account also we will write by capital account, in capital account on the credit side we will write by balance brought down 4,82,000. Now opening entry is finished, okay. Now let us see the next transaction. The next transaction took place on April 3rd, and that is deposited into bank 15,000. So we know that it is a contra entry, and since in this transaction we are paying cash to the bank, okay, so that means we have to record it in cash book. So in the cash book, on the debit side we will write to cash account, since on the receipt side we are receiving cash in which bank account, okay. So we will write in bank column 15,000, and in the credit side we will write by bank account, and who is making the payment of 15,000? Cash. So in cash column we will write 15,000. Since this is a contra entry, we will ignore ledger account, okay. We will not post in our ledger because the dual aspect of this transaction has been covered in the cash book itself, okay. And we already know that contra entries are ignored while posting into ledger. Then let us see next transaction that took place on April 4th, okay. Purchase goods from Jindal Trading Company. Now they haven't mentioned whether we purchase goods on credit or not, so we are going to assume that it is a credit purchase, and they haven't mentioned anything about GST, so we have to record this transaction in our in purchase book, okay. Sorry for my drawing, okay. So we have to record it in purchase book, and in purchase book we used to put input IGST, input CGST column, but in this question they haven't mentioned anything about GST, so we are going to ignore those GST columns, okay. So this is the simple format of purchase book. Now first transaction took place on April 4th, so we will write Jindal Trading Company. We purchased 200 meter silk and 100 meter cotton at 80 rupees and 40 rupees per meter respectively. So this information you will get in the question. So we got 16,000 and 4,000, that is altogether we purchased goods worth rupees 20,000, and since there isn't anything about trade discount, so we will directly write 20,000. Now after passing this entry, it's time to create ledger accounts, okay. Now the next ledger account we will prepare is Jindal Trading Company, because earlier we hadn't made Jindal Trading Company in ledger, so we will meet that. And in our previous session we have seen how we are supposed to post ledger from purchase account. So we have Jindal Trading and Company, so we prepare Jindal Trading Company's account, and since this is appearing on the debit side, okay, we used to divide purchase book into two parts. Since it is appearing on the debit side, what we will do is that we will write in the opposite direction, that is in the credit side by purchases rupees 20,000. Finish. Now since we don't have GST and IGST anything, so we don't have to do anything else, okay. Ledger preparation is finished. Now again we have to prepare purchases account, okay. Do we have purchases account made earlier? Nope. So here purchases account. Okay, now in purchases account, see the amount is appearing in credit side, so what we will do is that we will write it in debit side. So purchases account, sorry, wait, where is our subsidiary book? Okay, means sorry, we don't have to record it in purchase book. Okay, sorry, purchase account of our ledger accounts. Oh, sorry, if you remember properly, we used to write all together the total amount of purchase book, sales book of our subsidiary books. Okay, so individual entries we are not supposed to do that, we are not required to write. Okay, so now let us see the next transaction. The next transaction took place on 6th April. Sold goods to Radhakrishnan and Company, 50 meter silk, 40 meter cotton. So means it is a credit sale, so we have to prepare sales book. Now here is our sales book. In here we will write Radhakrishnan and Company, and when we sold goods worth rupees 6,250 plus 2,400, that is altogether 8,650. We don't have any trade discount or cash discount. So what we will do is that we will post ledger accounts. We will post ledger accounts. Now in Radhakrishnan and Company, do we have any Radhakrishnan and Company that we have made earlier? Nope. So we will prepare now Radhakrishnan and Company. And since the rule for posting of sales book is opposite to purchase book, so what we will do is that we will divide the sales book into two part. The Radhakrishnan Company's name is appearing on the debit side. That means in the ledger account also we will write in the debit side as 2 sales and amount of 8,650. We will not make sales account in ledger as of now. Okay, after balancing the accounts, subsidiary books accounts, we will do that. Now let us see the next transaction that took place on April 10. Return to Jindal Trading and Company. Now who is this Jindal Trading Company? The one from whom we purchased goods on credit. That means we are returning goods to them. It is purchase return. So we will prepare purchase return book. Here Jindal Trading and Company, here is the information of goods that we have returned them, and altogether amount is 2,200. Okay, then the rule for purchase return book and sales book is same. That means Jindal Trading Company's name is appearing on the debit side. That means we have to note it down in the debit side of, where is here, purchase return account. Oh sorry, this also you have to wait till the total amount is found out. Okay, and for Jindal Trading and Company, let us see where is Jindal Trading Company's here. Since his name is appearing on the debit side of purchase return book, that means in ledger accounts also we have to write in the debit side to purchase return account rupees 2,200. Okay, now let us see the next transaction. On April 12, issued a check to Jindal Trading and Company in full settlement. Means earlier we purchased some goods, then we returned, and out of the remaining amount that we are supposed to pay him, we issued a check for settling his account, and we received a cash discount of 2%. Now let us see how much amount we were supposed to pay him. For this we have to see in the subsidiary books. Okay, now we purchased first from Jindal Trading Company of rupees 20,000. Then we returned goods worth rupees 2,200. So when you deduct this 2,200 from 20,000, you will get 17,800. Now out of this 17,800, we received cash discount of 2%. So first we have to find out 2% of cash discount, and we know that cash discount is recorded in journal proper. So we will pass one journal entry for discount received. So Jindal Trading Company account, Jindal Trading Company debit to discount received account, and 2% of 17,800 is 356. Now, after deducting this 356 from 17,800, the remaining amount we had to pay. So for that amount, what we did is that we issued a check. When we issue a check, that means it will be deducted from our bank account. So on the payment side of our cash book, we will write by Jindal Trading Company, and in the bank column we will write 17,444. I hope you understood. Now let me repeat one more time. At first we purchased some goods from Jindal Trading Company worth rupees 20,000. Then again we returned him 2,200 worth of goods. That left us with the balance amount of 17,800. Now in the question they said that we received a cash discount of 2%. So 2% of that 17,800 is 356. Since we received discount, for that we will record in journal proper of rupees 356. Now after deducting this 356, the remaining amount we paid through check, and when we issue check, it will be deducted from our bank account, that is 17,444. So this is how you are supposed to do. Okay, now we have to pass ledger accounts. Now for the journal entry that we have passed, that is, let us see here, Jindal Trading and Company, we have to see into the ledger account of Jindal Trading and Company. Where is it? Here, Jindal Trading and Company. So to discount received account, that means we will record it in the debit side, that is to discount received account 356, and he received, his account was debited while paying cash, means while paying check to him. So to bank account rupees 17,444. Now you can do this question either like first you can prepare cash book and special purpose subsidiary books first, and journal proper, and then you can start posting in the ledger. Okay, it is a very lengthy process, but I don't think they will ask in the exam, but still you have to understand how you are supposed to post. Okay, then next transaction is on April 15. Received cash 2,000 and check for 66,000 from Radhakrishnan and Company. The check was immediately sent to bank. Discount allowed 200. Now for this discount allowed, we will pass journal entry, but for the time being you just focus on the first part of the question of the transaction. Means we received cash 2,000 and check 6,000. That means we are receiving money. So on the cash book we will write to Radhakrishnan and Company rupees 2,000 and rupees 6,000. Now let us move into the ledger account. Since it is Radhakrishnan and Company's account, let us see where is Radhakrishnan and Company's account. Here, Radhakrishnan and Company's account. Now since there, where is here, Radhakrishnan and Company, it is appearing on the debit side. Okay, so in the ledger accounts we will write in the credit side by cash account, by bank account, 2,000 and 6,000. Then again we allowed discount. For that we have to pass journal and journal entry. Okay, here discount allowed account debit to Radhakrishnan and Company. So since we are posting in Radhakrishnan Company, so we will put by in front of by discount allowed, and we will write in here by discount allowed account rupees 200. In the similar manner you have to prepare discount allowed account, and for previous transaction that we received discount from Jindal Trading Company, that also you have to prepare ledger account like this. Okay, so for Radhakrishnan and Company we will write to Radhakrishnan and Company rupees 200. Now let us see the next transaction. Purchase furniture from Sitaram and Company on credit for 30,000. Now from the previous transactions we know that this business for which we are making records, they deal in clothes, okay, and in here they are purchasing furniture, that means it is for their office use, so we will not write it in special purpose subsidiary books. We cannot write it in, note this transaction in purchase book, neither we can write it in cash book because we are purchasing in credit. So what we will do is that we will put in journal proper. In here we will write furniture account debit to Sitaram and Company 30,000. Now let us post into the ledgers. First we will see furniture account. Since we haven't prepared furniture account, now we will prepare one. Where is furniture account? Let us see. Here, furniture account. Oh sorry, we already had balance per down of 90,000, so now we purchased from Sitaram to Sitaram and Company rupees 30,000. Now next is Sitaram and Company. Now let us see, do we have Sitaram and Company's account? Here to Sitaram and Company. In here we will write by furniture account rupees 30,000. Finish. Now let us see the next transaction. On 16 April, Gopalji withdrew goods for his personal use, means he withdrew some goods for his personal use. So for that also we cannot write it in cash book, we have to write in journal proper. So the transaction is drawings account debit to purchases account. Now let us see, do we have drawings account in our ledger? No, so we will make one drawings account, and here we will write to purchases account 4,000. Then next is purchases account. Do we have purchases account? Yes, purchases account, and in here we will write by drawings rupees 4,000. Okay, then next transaction we have on 16, again on 16, sold goods to Bridge Kishore 80 meter silk per meter less 5%. Okay, now this is sales, so we have to write it in sales book here. Sorry, it is sales book to Bridge Kishore 80 meter silk at 130 per meter, that stands up to 10,400. Then they said less 5%, that means trade discount of 5% of rupees 520. So altogether we sold goods worth rupees 9,880. Now let's see the ledger account of Bridge Kishore. Here Bridge Kishore, we will write to sales account rupees 9,880. Remember, for trade discount we don't record it in our books. Then next transaction, let us see, on April 18, return by Bridge Kishore 10 meter silk. Now this is sales return, so we will write in sales return book Bridge Kishore, he returned 10 meter silk. Now while returning, if they don't mention the rate, then you have to understand that you have to check. This is 10 meter silk that we earlier sold to him at the rate of 130 per meter, so here also we will put 130 meters, so altogether it's 1,300. Then while selling to them we gave trade discount of 5%, again we will give trade discount of 5%, that is 65. So altogether we sold goods worth he returned us 1,215, 35. So in the Bridge Kishore account in ledger we will write it down. Let us see, where is Bridge Kishore's account? In here, so we will write by sales return account rupees 1,235. Then now next transaction is issued a check to Sitaram and Company. Now this is easy. When we issue check, that means money will be deducted from our bank account. So let us see in the cash book, by Sitaram and Company rupees 30,000. Now again we have to post in the ledger in Sitaram and Company. So where is Sitaram and Company's account? Let us see here. So to bank account 30,000. Okay, since in the cash book the transaction took place in credit side, in the ledger we have to write in the debit side, and since the amount was written in bank column, in ledger we will write to bank. Okay, now let us see Next transaction on April 20, purchase goods from Mohan Silk Limited. Now this will go to the purchases book. Now where is purchase book? Mohan Silk Limited. Altogether we have 37,000. Now in Mohan Silk Limited account in the ledger we have to make entry. Here Mohan Silk, and here we will write by purchases rupees 37,000. Now let us see the next transaction. On April 21, accepted a bill drawn by Mohan Silk Limited for 40,000 at 1 month. Now accepted a bill is nothing but bills payable. So we just received a bills payable. We haven't received any cash, so that means we have to record it in journal. So we will write Mohan Silk Limited to bills payable. Since bills payable is our credit or liability, so we will credit this account and we will debit Mohan Silk Limited account with 40,000. Now let's make a ledger entry in Mohan Silk Limited. Where is here we will write to bills payable account 40,000. Now next we have bills payable account. Since we haven't made bills payable account yet, so we will make now. Here bills payable account, and we will write by Mohan Silk Limited 40,000. Now let us see the next transaction. Received from Bridge Kishore 7,500. Means we received cash, so cash account to Bridge Kishore 7,500. Then in Bridge Kishore's ledger account, where is it? Bridge Kishore's ledger account we will write on the credit side as buy cash. Okay, here Bridge Kishore we will write buy cash 7,500. The next part of that transaction was discount allowed 100. So journal entry discount allowed account debit to Bridge Kishore. Now let us see in the discount allowed column of discount allowed ledger account. Here discount allowed we will write to Bridge Kishore 100. The next journal purpose we have Bridge Kishore's account. In Bridge Kishore's ledger account we will write by discount allowed. Okay, here by discount allowed rupees 100. Then let us see the next transaction. On January 25th, received an acceptance from MARAM-COMMERCE for 30 days for the amount due from them. Means this is our bills receivable. So we will pass journal entry because we haven't received any cash, neither we have paid anything. So this is a journal entry, bills receivable account to MARAM-COMMERCE rupees 34,000. Now next let's focus in the bills receivable account in ledger. Since we haven't made any, we will prepare now. Here bills receivable account, and that we will write to MARAM-COMMERCE 34,000, and in MARAM-COMMERCE's ledger account we will write by bills payable by bill receivable. Here by bills receivable account 34,000. Now let us see the next transaction. Goods purchased for cash 20,000. That means it is a cash purchase, so we will record in cash book and we will write by purchases account 20,000. So we will pass ledger, we will post in the ledger account. Where is purchases account? Let us see. Here purchases account, since it appeared on the credit side of cash book, we will write in the debit side and we will write to cash account because we paid in cash 20,000. Then next transaction we have on 26, withdrew from bank 10,000. Now this withdrew of bank they haven't mentioned for personal use, so we are going to assume it as contra entry. So first we will make entry in the cash book to bank account 10,000, then by cash account 10,000. Now contra entries are to be ignored while preparing ledger account, so it will not have any treatment in ledger. Let us see the next transaction. Bridge Kishore gave his acceptance for 25,000 at 2 months. Means Bridge Kishore gave us bills receivable. Okay, so we will pass journal entry. So bills receivable account to Bridge Kishore rupees 25,000. Now let us see in the bills receivable account we have to write to Bridge Kishore. Okay, to Bridge Kishore rupees 25,000. Then next is Bridge Kishore account. In Bridge Kishore we will write by bills receivable. Where is Bridge Kishore's account? Here by bills receivable account 25,000. finish. Now next transaction, paid salaries by check, that means cash account. And here we will write by salaries account in bank column. Now we have to prepare salaries account since we don't have any salaries account made earlier. So here salaries account, since it appeared on the credit side of cash book, we will write it down in the debit side. And since we made payment through check, that means we will write in here to bank 3600. The next transaction is paid rent 1200. That means in the cash book we will write by rent account, in cash column we will write 1200, and in the ledger we will prepare rent account, and on the debit side we will write to cash account 1200. Now all the transactions are finished. Now let us see cash book. In here cash book we found by balance credit down, that is 23,200, 19,956. This will become balance brought down. That means cash book is showing debit balance for cash and bank column. Okay. Then next is the subsidiary books. Let us see. Purchase book finish. It is showing debit balance of 57,000. Then sales book we found our total 18,550. Then purchase return book, sales return book, same. So what we will do is that we will prepare ledger account for this purchase account, sales account, purchase return account, and sales return account. Okay, now let us see those accounts. Here purchase account we already had some entries, but now after finding out the total on the last date of the month, we got two entries as per purchase book. That is nothing but total of purchase book 57,000. So we will write 57,000 in here. Now remember, these sales, purchase account, sales account, then purchase return, sales return account, we don't need to balance. Okay, now the next is our sales book. Total we got 18,530. So we will write on the credit side by sundries as per sales book 18,530. Then next we have purchase return book. We got total of 2,200, that is credit total. So in the ledger purchase return we will write in the credit side by sundries as per purchase return book 2,200. Then at last we have sales return book. We got debit total of 1,235. That means we will write on the debit side to sundries as per sales return book 1,235. The similar manner we will find out balance brought down and carried down for remaining account, ledger accounts. Okay, except for this nominal accounts. All the nominal accounts we don't need to balance, so you just leave nominal accounts like that. Okay, no need to waste time balancing them, you will simply lose time. Okay, now at the last part what we are supposed to do is that we are supposed to prepare trial balance. Okay, now first see the account. Cash book was prepared first, so we got debit balance of cash and bank. Okay, so that we will write cash in hand. Cash in hand is nothing but the balance brought down that we got at the end of the month of rupees 23,300 in cash column, and in bank column we got 19,956. Now after that, and don't forget to write trial balance as at 30th April 2017 because we are preparing trial balance on this date. Okay, then after preparing these two, let us move to the ledger accounts. Now first ledger accounts that we had is Amar and Company. So see, both the sides are same, so no need to balance it. The next we have Bridge Kishore. After balancing this Bridge Kishore's account, we got debit balance of 2,045. So we will write Bridge Kishore on the debit column 2,045. Then let me just close this. Okay, so that we can solve properly. Okay, now next ledger account we have Charan Das, and we got debit balance of 42,000. So we will write Charan Das debit balance of 42,000. Then next we have stock account. Now see, in stock account we only had debit, that is opening balance of 2,05,000. So we will write in the debit side 2,05,000 for stock account. Then next ledger account we have furniture account, and after balancing we got debit balance of 1,20,000. So this one we will write furniture account and the debit side 1,20,000. Then next, after furniture account we have Mohan Silk limited account. Now Mohan Sukh limited account, we got credit balance of 12,000. So the trial balance, we will write Mohan Sukh limited on the credit side 12,000. Then next we have capital account. This also we got credit balance of 4,82,000. So we will write capital account credit balance of 4,82,000. Then next we have Jindal Trading and Company. So we don't have any balance brought down or carried down, so we will just leave this Jindal Trading Company. We will not write it down in trial balance. Then next we have Radhakrishnan and Company, showing debit balance of 450. Debit balance of 450. Then next we have Sitaram and Company. It is also showing same on the both sides, so that means neither debit balance nor credit balance, so we are going to skip this in trial balance. The next is discount received account. Now discount received account, we didn't balance it off, okay, but it is showing 356 on credit side. That means it is having credit balance. So discount received account credit balance 356. Then next we have discount allowed. This is also showing 300, 200 plus 100, 300 of debit balance. Debit balance means it is appearing on the debit side. That means it is showing debit balance. So we will write discount allowed account 300 on the debit side. The next we have drawings account. It is showing debit balance of 4,000. So we will write drawings account debit balance of 4,000. Then next we have purchases account. Since we haven't balanced it, so you have to total up 20,000 plus 57,000 minus 4,000. Clearly we can see that debit side is more than credit side. That means it will show debit balance. So after deducting 4,000 from the total of these two, that is 77,000, we got 73,000 as total. So purchases account is showing debit balance of 73,000. Then next we have sales account. It is showing credit side of 18,530. That means sales account is showing credit balance of 18,530. The next account is purchase return account. This is also showing on the credit side 2,200. So we will write purchase return account credits balance of 2,200. Then next we have sales return account 1,235 on debit side. So sales return account showing debit balance of 1,235. Then next we have bill receivable account showing balance debit balance 59,000. So we will record in here 59,000 on the debit side. Then next bills payable account showing credit balance of 40,000. So we will write 40,000 on the credit side. Then next we have salaries account and rent account. Both of them, they are showing debit balance of 3,600 and 1,200 each. So we will write on the debit side together, okay, salaries account and rent account. Now after writing all the ledger accounts, means we don't have any more ledger accounts, okay. So what we will do is that we will find out total of debit and credit, and after adding both the columns, if your total doesn't match, then means that you have made some mistake, okay. But if your trial balance both the sides are equal, that means your answer is almost 90% correct, okay. There are some chances that you had made mistake, but still you will get total same, okay. So when your total of debit and credit sides are same, it is 90% sure that your answer is correct, okay. So I hope you understood this question. It is a lengthy one, but you go over through this one more and more, so that you will have clear idea how to prepare ledger accounts and trial balance from special purpose subsidiary books, okay. So for this session we will wind up here. Thank you.